I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the Pink, symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Sean Brodrick. He's the senior editor for WeissGroup.com. Welcome back to the show, Sean, and Happy New Year.
Thanks very much for having me on. Happy New Year to you, too.
Sean, does gold look good right now?
Gold looks good. I think gold's about to have a slight pullback, but that's a pullback you can buy. We've seen people call the top in gold for days upon days over the past few weeks. And I'm sure it's going sideways now. It has for the past week or so, and that's why I think that a pullback would not be surprising. But the reason gold will likely pull back is because the U.S. dollar, which has been weakening quite a bit, is due for a bounce. It's testing the U.S. dollar index is testing support at 94.75, so a bounce in there would not be surprising. And so that should trigger a pullback in gold, and that pullback in gold is one you can buy. There's a lot of reasons why, but I will point to the fact that everyone seems to think the crisis in the markets is over. I highly doubt that it is. I think that we're headed for more trouble in the global markets and in the North American markets as well, and gold is a safe harbor. So when people get worried, they tend to buy gold. And sure enough, we're going to see more of that.
Should you be buying gold miners at the same time?
Oh, that's exclusively what I'm putting my subscribers into now, because they're leveraged to the underlying metal. I have a great chart on that, by the way, which I'll be putting up on Thursday on EdelstenInstitute.com. I have a chart on gold and a chart on how gold miners are doing or can do extraordinarily well when gold goes higher. And it's also going to talk about another thing, which is that the gold ETFs, which tend to boost performance on the way up and just add to the weight on the way down, well, gold's going higher, and the gold ETFs are part of that, because the big gold ETFs have added about 145 tons of gold since October, and they seem to be buying more and more. Again, this is the fear factor that's playing out in the markets. People are worried, they're buying gold, and probably speculators are also buying gold simply because gold is going up. Now, this can turn against us. When gold goes down, the ETFs will sell, and that'll add to the downside move. So I guess it's good news for option players, because it'll make the moves to both the upside and the downside bigger than they might be otherwise. But that is definitely something to watch.
Should you be buying physical gold and packing it away somewhere instead of having just a certificate?
Well, I have plenty. So if you don't own any, then perhaps you do want to do that. I mean, if gold is going higher, again, it all depends on your time frame. We probably will see a pullback come the summer, like we normally do. How low will gold get then? How high is it going to go in the meantime, so that when that summer pullback comes, you know, how low is it going to go? Now is a great time to add to physical gold. If you don't own any, don't buy it all in one go. Everyone should use common sense in this. You just buy a slice at a time. Allocate some money, pick up some gold, that kind of thing. It's good to have the physical around. It's real peace of mind, and I highly recommend it to anyone, because it'll give you more peace of mind than any politician ever did. So, I would do that, but just don't buy it all in one go.
What about silver?
Well, silver, silver is, it's like gold on steroids, or more to the point, it's the drama queen of the precious metals. And silver's looking very good right now. I like silver here. It had a great run from late December on into early January. It's pulled back a bit. Some of that sideways action that we saw in gold, we are seeing in silver right now. But after some sideways action, I expect we'll see the next leg higher in silver. That should at least bring it to $16.50. Could bring it to $17 where there's some overhead resistance. So silver looks good. I have some silver miners recommended. I'm probably going to recommend more because, silver tends to overdo what gold does. Now, it isn't quite the safe haven play that gold is, that's for sure. But it also has industrial uses that gold really doesn't have either. And I'm of two minds about this. Everyone is. I've been turning more bearish. I'm not completely bearish, but I've been turning more bearish. And if things really hit the rocks in the global economy, that will probably lower silver demand simply because industrial demand will go down. That's just one of the things that happens. But on the other hand, if the global economy is going to recover, you definitely want to own silver because the industrial uses for it keep going up every year, and they find more and more uses for it all the time.
What about palladium and platinum?
Palladium and platinum. Now with palladium, which is trading very near what the price of gold is right now, and had a great run recently, and it had a great run on the expectations that there's going to be improvement in the U.S.-China trade relations, which means more cars being bought, that kind of thing. So now we're starting to hear the talk about substitution effect, that the price of palladium is going to get so high that they'll find something else to use in place of it. One thing that they, potentially could use is they could use platinum. Platinum was recently at $828. Palladium was at $1,269. So you can see why they might want to think about that, but it's not as easy as many people think. It actually takes a lot of work. You have to rejigger the engines, rejigger the catalytic converters to actually run off something like platinum. So I don't expect to see that, even though we're hearing talk about it in the market, which means if the global economy recovers, then things like palladium should have a very good time.
We'll have more with Sean Brodrick right after this.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange symbol CYP, the Pink's CYDVF, and on Frankfurt C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Sean Brodrick. Sean, what's happening with crude oil right now?
Well, crude oil is having quite the rally. After that horrible sell-off that went into mid to late December, we've really seen it come rocketing back. Part of that's due to lower inventories and OPEC's tough talk. They say, we're really going to cut production this time, and this time we mean it. It has been a nice run. We have a guy here who does market projections. He thinks oil could run as high as 65 to 67 before it runs into serious resistance. So oil actually looks like a great place to put some money to work. Again, I would buy those stocks leveraged to the underlying commodity because those are the ones that can really do the best. So oil is a good market to be in right now.
Should people be looking for stocks that pay good dividends?
Well, that's what I've been doing with my subscribers. In, say, the Wealth Supercycle portfolio, which is my monthly newsletter, we only have one stock in there, a uranium stock, that doesn't pay a dividend. Everything else does. Simply because, again, I am turning more bearish, despite this rally. despite this rally, I think that there are many forces out there, that, including things like liquidity, including a whole bunch of forces that are going to weigh on the market. So I want to be prepared for that. Now, this being an up day, my stocks are going up. But when the down days come, and that could be sooner rather than later, then because so many of the stocks in the wealth supercycle portfolio not only pay dividends but are growing those dividends, which is a very important thing to have, because they're growing those dividends, they should be cushioned on the way down and not go down nearly as much. So that's the way we're going to play it. We have nice dividend players. They're in things like energy. They're in healthcare. Healthcare, by the way, it tends to, again, to be recession resistant. People need healthcare no matter what the economy is doing. So there's a whole bunch of things where they pay good dividends. They're growing those dividends. Those are the kinds of things that I'm steering people toward now, along with precious metals.
We'll have more with Sean Brodrick right after this.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Sean Brodrick. Sean, speaking of uranium, is that a hot area right now?
Sure, it's very hot. I mean, it again really getting the nice bounce, and it's a metal that really seems leveraged to the market. So when the market sells off, uranium stocks just get thrown out the window. When the market rallies, uranium stocks, they really ramp up. So it's a good place to be, again, if you think the market is going higher. If you think the market's about to hit some kind of overhead resistance, then you might want to take some gains, but that's completely up to what individuals do. Longer term, though, the outlook for uranium is just fantastic. We're having new like nuclear reactors announced all the time. India just announced it's going to build a whole bunch of them. And meanwhile, there really isn't new supply coming on, not at these prices. Prices will have to be much higher for people to bring new uranium supply on. And so that just points to a good old-fashioned supply-demand squeeze, maybe sooner rather than later. I think the short-term action in the uranium stocks is very speculative. So wait for a pullback by the pullbacks, that kind of thing. But the long-term picture is incredibly bullish. And so if you're just buying on the long term, then you can just pick some up now and just hold your nose and expect to pull back eventually and just not get shaken out, hopefully.
Is the marijuana trade picking up?
Well, the cannabis stocks is another industry that's, very leveraged to the market. A lot of alpha there. It just zooms when the market zooms, and it crashes when the market goes down. Now the market's going higher. Marijuana looks good. I am actually looking at U.S. cannabis plays now more than Canadian cannabis plays. I think there's some real potential there for some upside surprises. And so I think there's some places you can definitely make some money in that this year. But again, this is one where, you really might want to wait for a pullback because these things are really sensitive to the broader market in general. And so when the broader market sells off, all the money, all the support for marijuana stocks just seems to disappear, seems to dry up. And so, you get a pullback, then you can pick up those stocks, you can do well. But it's really hard to pick them up on a day when the market's, charging higher because marijuana stocks, along with uranium stocks, tend to outperform the market.
What about agricultural commodities? Sugar had a huge bump the other day.
Yeah, it did, and Soybeans had a great couple of weeks and stuff like that. A lot of that might be priced in. Here's the thing. Later this week, we are going to hear from China and the U.S. about how well their trade negotiations went. I expect that announcement to be very light on specifics and heavy on platitudes, where they say, of course we're going to work together, and this whole thing was a tempest in a teapot and all that stuff, but not have any real specific stuff. One thing we will be watching is if China starts to buy U.S. soybeans again, because for a while they just stopped. And so that's really, really important to the U.S. agriculture sector. I don't know the answer to that, because, again, I don't expect them to nail the Chinese down on any specifics. It really depends on what China wants to do itself. That said, if they can buy cheap U.S. soybeans and that helps them out, then why wouldn't they do it? So that'll be an interesting sector and interesting industry to watch this week and see how it actually works out.
Well, the president said that talks with China were going well. Can we get anything from that?
Well, he says a lot of things. I mean, of course he's going to say that. What else is he going to say? Oh, things are going badly. No president in his right mind would ever say that. So again, look to see what kind of details there are on the trade announcement. If it's very light on details, then the Chinese can do whatever they want. And they probably will. So look to see what kind of details come out in that trade announcement. It'll be a very interesting thing to watch.
Sean, thank you so much for chatting with us.
Thanks for having me on. I appreciate it.
My guest has been Sean Brodrick, Senior Editor at weissgroup.com. You're listening to HowStreet.com Radio. Find us on Twitter at HowStreet, our YouTube channel, Talk Digital Network. Questions for Sean or any of our other guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.